6 charts, 6 opportunities. Here's exactly where euro, dollar, gold, wheat, oil and nat gas are heading this week. Toward the end of last month, EUR USD made a strong push down into the lower zone of the range, trading right around the key 1.1390 level. That's a level worth watching. Price didn't just touch it and bounce, it actually traded through it. From there, momentum slowed down and price moved into consolidation. Then, on a major catalyst, the non-farm payrolls released early this month, buyers stepped back in, and price closed and held above 1.1502. That reclaim above 1.1502 is the key shift here. It tells us the lower zone sweep was likely a liquidity grab, not the start of a bigger move down. Now, the 1.1480 to 1.1510 zone becomes our support. As long as price holds above this area, we're favoring longs. That's the zone that flips the bias in our favor. Lose it, and the picture changes. From here, we're watching to possible paths for continuation to the upside. Scenario 1, a pullback slightly lower into the 1.1495 zone. From there, we want to see a clear reaction and a local break of structure on the lower time frames. That's our confirmation. If that plays out, the main target is the previous strong high at 1.1616. Scenario 2, continuation from current levels. Locally, we already got a liquidity sweep. If we get a local break of structure and price closes and holds above the 1.1530 to 1.154 zone, that's where we'd start looking at buys. Alternatively, if we get a reaction and price drops into the marked green zone, we'll want to look for a break of structure and a confirmed close on the lower time frames. If that happens, that's another valid spot to start considering long positions on the euro. The dollar index is showing us a mirror image of this same setup. The XY and EUR USD move inversely, so everything we just mapped out for upside on the euro plays out in reverse on the dollar. We haven't swept the low at 99.387 yet. That's our first target to the downside. And if we get a confirmed close below it, we can start looking at targets even lower than that. Just like on the euro, there are two scenarios in play here. First, we could drop straight from current price down to that target. Second, price could push up first, grab liquidity above, and then react from there with sellers stepping back in. If that plays out, we'll need to drop down to the lower time frames and look for a break of structure to confirm. Moving on to gold, we just saw an almost 11% move, clean, with barely any pullback along the way. That kind of one-directional run tells you exactly how strong the momentum behind this has been. Above current price, there's still a lot of untapped liquidity sitting there, unswept, but at the same time, we've also got untraded targets sitting below, levels the market hasn't touched yet. There's a zone worth marking out where we could see sellers step back in. That's the 4,632-4,770 area. Price will most likely reach that zone, and that's where we'd expect a pullback to happen. If we get a confirmed break above that zone, that's when we can start considering longs with real conviction. Until then, it's best not to think too big picture here. The only thing worth considering is smaller, Local long positions with light leverage, targeting that marked zone, nothing more aggressive than that until we see how price reacts there. Let's move on to wheat. We haven't looked at this one in a while. In my experience, this asset trades better during the winter months. In summer, it's almost always stuck in consolidation, with very low volatility. Here's the marked consolidation zone. Right now, we're sitting at the upper boundary of this range. From here, we could easily retest the lower boundary again, or we could hold above, push up into the imbalance zone at 666 to 678, and then rotate back into range-bound movement. Oil is a really tricky situation right now. There's a lot of uncertainty around the Strait of Hormuz, and at any moment, Trump could come out with another headline that shakes up the whole market. There are a lot of 4-hour imbalances here, and those are good spots to look for reversal points. One active scenario, a drop into the 88.50 zone, where we'd look for a break of structure. If that plays out, the target would be covering the imbalance up at the 97 zone. Outside of that setup, it's best to sit this one out and not get involved in the other moves. On nat gas, same as before, I'm only looking at long positions here. The main target is 3.012. But that's a longer-term objective, so it's better to trade this with smaller positions and more local targets along the way. Ideally, we'd want to see a retest of the imbalance in the 2.70 to 2.75 zone. That's where we'd start looking at longs, but only once we get a confirmed break of structure. Don't skip that confirmation. This is your weekly market map: 6 assets, 6 trading strategies. Share your predictions in the comments, and to receive daily reviews, subscribe to the channel and join our flock.